While everyone's panicking about the real estate market, billionaires are quietly buying. And I'm talking about serious money. Buffett just bought $3.5 billion in commercial real estate, and other major investors are following. Here's what they know that you don't. First, let's look at what's actually happening in real estate. Commercial property prices dropped 15 to 20% in the last 18 months. Office buildings are especially cheap because everyone's remote now. But, and this is important, the cap rate, that's return on investment, just hit 5 to 7% for quality properties. 5 years ago, you were lucky to get 3%. Interest rates are starting to stabilize around 6.5 to 7%. That's down from 8%. So refinancing becomes possible again. Here's what Berkshire Hathaway and other smart money are doing. 1. Buying cash. When you have billions, you buy with cash and negotiate harder. You eliminate the mortgage payment variable. This is important. If you have $200,000 to invest, you can do the same. Buy with cash in markets where prices have stabilized and you eliminate the rate risk problem. 2. Buying in secondary markets. They're not fighting over New York and LA. They're buying in Denver, Austin, Phoenix, markets with strong job growth and affordable entry points. 3. Buying for cash flow, not appreciation. The billionaire thesis is simple. I want this property generating 5 to 7% annual return. They don't care if it appreciates. The cash flow is the strategy. 4. Buying stabilized assets. Not development deals. Not risky renovations. Stabilized, already performing properties. Lower risk, predictable income. You probably don't have billions. But here's how you use this same strategy. First, if you're sitting on cash earning 0 to 1% returns, you're losing to inflation. A rental property earning 5% cash-on-cash return, that's actual money in your pocket after all expenses, beats the stock market most years. Second, you don't need to be all in. If you've got $100,000, you can buy a $400,000 property with financing and participate in this trend. The math still works. Third, stop looking at your local market. Expand to secondary markets. Best-in-class markets right now. Austin, job growth, no state income tax. Denver, strong economy, affordable, and Phoenix, population boom, stabilizing prices. Fourth, focus on cash flow. Ask your real estate agent, what's the cap rate on this property? If they don't know, find a new agent. You should know the expected monthly income before you buy. What's holding you back from investing in real estate? Drop it in the comments.